I've been trading the markets for more than 10 years, and I can tell you the moves that we have seen recently are not normal, not at all. I make these videos in order to help you make profit with your trading, and you can be profitable even in these volatile times. And not only will I be sharing with you 3 good tips that you can follow that will help you to avoid big losses in these times, but this is time for our regular weekly analysis. And this week, starting on the 4th of August, the first full week in August 2025. And of course, we look at the high impact news that's coming out for this upcoming week. We will look at the profit and loss, which I had from last week's trades. And then I will share my pending orders. That's the trade setups that I have in place for this upcoming week. So if you were watching the markets or trading the markets on Friday, the first Friday of August 2025, you saw the non-farm payrolls came out, and it was devastating news about the U.S. economy. The S&P 500, the Dow Jones, the NASDAQ, they all went down because of this data that came out that was released. And the reason I don't usually show anything from the stock market is because the stock market is not an indicator of the state of the U.S. economy. Because 93% of the stock market is owned by 10% of the wealthiest people in the United States. So how can that be an indicator of the state of the U.S. economy? Everybody said, well, the stock market's at all-time highs. Yeah, so what? But the jobs report came out, and now that is a good indicator of the state of the U.S. economy. And one guy in particular was not happy about that at all. He was not a happy camper. And so what did he do? He fired the person that reported the data. Oh my God. Is this for real? Yes. This guy cannot accept reality. Anyway, it is what it is. So let's jump in and get started and have a look at this upcoming week and see what the markets hold for us. And first of all, we have the high impact news, and it's a fairly light week compared to last week. But be sure and check forexfactory.com for your local times and be aware of all of these news items. And then the profit and loss from last week's trades. Well, this won't take very long because it does happen. There are losses, and I will share my losses with you. I'm very, very transparent about the trades that I take. First of all, before we look at that though, we'll look at the dollar index, the DXY. It was going up all last week, and that was because of the previous weekend. Trumpty Dumpty was raving about the greatest trade deal in the history of the observable universe. Well, okay, so that sounds good for the US dollar, and yes, it did go up until the real data came out showing us the state of the US economy, and then it gave back in just a few hours. It gave back all of that it had earned over the last 4 days. And this is just the initial reaction. We are going to see an increasing weakness of the US dollar, as I've been saying all year long. We're going to see an increasing weakness of the US dollar. It will probably be back to where it started the week, and that was where that yellow arrow is there on the left-hand side. We will probably get back to that number, which is around 97.6 by the end of the week. So that's the state of the DXY, continuing to decline, continuing to see weakening of the US dollar. Now here's the trades that I shared with you last week, and I'll go through these very, very quickly. Bitcoin was the only one where you could have done something. I gave you a buy limit at 117,300. If you'd have taken that on a Tuesday, it did go up to 118,600, so a little bit of profit there before it moved down during the rest of the day. Came back up the next day, but then we've been seeing a decline, and now it's down to around 113,000, 114,000. But for the major pairs that I share with you, well, especially gold, there was a little bit of profit made on Monday. If you'd have taken that first order that I gave you, that first buy limit at 33.30, we did have a gap down, and it came down and hit the pending order, dropped below that, but came back up and gave us 150 pips about midday on Monday. But then that was all she wrote. Okay, even on Monday it started to drop down, and then on Tuesday and Wednesday went sideways until on Wednesday. Then it just took the elevator down, and we started seeing bearish on both our day charts and 4-hour charts. and then it came back up a little bit on Thursday and then continued its decline on Friday. So Friday morning, I hope that you weren't going short on gold, although we were seeing indicators telling us that gold is bearish on the long-term charts. But if you took a short trade and you didn't protect that trade with a stop loss, one of two things happened. You incurred a big loss, or you wiped out your account. You blew your account, because gold just turned around and it didn't take the elevator up, it took the starship up. And that number 800 pips is a typo. It was actually 700 pips moved during the day. But we don't see these kind of moves. This is not normal, guys. It used to be, 300 pips was a big move for gold, but not anymore. Not in these turbulent times. But going more for the short-term charts, if you did the non-farm payrolls, let me know if you did well on Friday with the non-farm payrolls. I mean, when the news came out, it was obviously really bad economic data for the U.S. economy. So you could have seen easily that gold was going to do very, very well, and it did for the entire rest of the U.S. session. And then with the Euro-US, okay, that was a loser, as all of the major pairs were. I gave you buy limits on those because we were bullish on all of the day and 4-hour charts, the long-term charts. But this is the previous weekend where the president announced his greatest trade deal in the history of the observable universe. Well, the EU didn't like that so much. The 27 bloc countries, they weren't too happy about that, and it crashed their economies, starting with the euro, which crashed all week long, then the Australian economy, then the New Zealand economy, and then the pound, and then the USD CAD, and then the UJ. All went the wrong direction. So with the stop loss that I always have in place on all of my trades, I completely, totally protected my account, though I did incur some losses. So that brings me to, what should we do in order to protect our accounts? What can we do to keep from blowing our accounts? Well, there are 3 good things you can do. First of all, trade small. In these turbulent times, you need to trade small, because you don't know what's going to happen. You cannot predict the markets. Don't even try to predict the markets. So trade small. And if you trade small and you have a loss, you'll have a small loss. But if you trade big and it goes against you, then you have a big loss. So that's first, trade small. And then 2, trust your strategy. Your strategy, if it's a good strategy and you're used to it and you've been using it for a while and it works, any strategy that you trust will work most of the time. No strategy works 100% of the time. No strategy. So trust your strategy, take your trades accordingly, and protect your account, number 3, with a stop loss. Always use a stop loss. Always use a stop loss. I cannot overemphasize that. When I take a trade, the first thing I do is put a stop loss. Immediately. You've got to protect the trade. The markets don't care who you are. They are designed to take your money. They don't care how much money you have. They will eat your lunch. You've got to protect your accounts. This is why 90% of traders lose money trading. You've got to use proper risk management. So trade small, trust your strategy, and use a stop loss. This will help you to avoid big losses. You are going to incur losses. It's just part of the game. Accept that fact and use good risk management, and you can be profitable trading Forex. So let's jump over and look at the pending orders that I have in place for these upcoming week. And I do all of this to help you make profit. I hope you're making profit. If you are, please leave a comment below this video. I'd love to hear from you. But remember, guys, this is not financial advice. I am not a CPA. I'm not a financial advisor. These videos are strictly for educational purposes only. It's up to you to manage your own account, to use good risk management. So first of all, we look at the Euro-US, and I have a buy limit on that. Yes. Okay, we should be getting back to normal times now that we are seeing the real data that's coming out and showing the state of the U.S. economy, the real state of the U.S. economy, which is not good. So we are bullish on the major pairs. And I have a buy limit on the Euro-US with the entry price at 1.1575, and I have the take profit for those of you that have requested it. The AUD-US also bullish, so I have a buy limit with that one at 0.6460. And then the New Zealand US, buy. Okay, market execution, just buy the New Zealand US when the market opens on Monday morning. And there's your take profit for those of you that requested that. And the pound US, just buy. All right, just buy the pound US. It's very, very likely to start going up. I'm bullish on the US pairs. The USD CAD, of course, being the opposite of the other major pairs, sell. All right, this is a sell limit. All right, let it retrace just a little bit if it will, and with the entry price of 1.3800. And then the UJ, just sell. Just sell the UJ. You can't go wrong with selling the UJ. Now, somebody, can you tell me what that candle is? That red candle, that last red candle in the close of the U.S. session? Just leave a comment below and tell me what is the name of that candle. I know. I'm just curious if you know. And don't tell me it's a big big ass red candle. Don't tell me that. Okay, I can see it's a big ass red candle. There is a name for it. Do you know what the name is? So just sell the UJ when the market opens on Monday morning, and the Tokyo market is one of the first to open, so it should get moving in the right direction straight away. And then finally the gold. Okay, everybody trades gold, and we've got that huge $70 move. This is the day chart that we've been looking at on these pending orders. However, the day chart is bearish. Don't be confused by that. Okay, it takes a while for the long-term chart to give us a clear direction on when there's a change in direction. And the 4-hour chart is bullish. All right, so I am bullish on gold again. All right, I have a buy limit. Now this is very, very cautious buy limit, guys, at 33.40. It might not even pull back, because it's common that when the Asian markets open on Monday, they just do what the U.S. market was doing at the close of the session on Friday. All right, so we could just see that just start to escalate to higher prices immediately. So, but cautiously, I have a buy limit with the entry price at 33.40. If we should get a little bit of a pullback, then this order will execute. But I'll be watching it. I trade the Asian Pacific market, so when the market opens on Monday morning, if I see that gold is just going to start going to higher prices, I'll go ahead and do a market execution order. And I expect we will easily get up to 3,430, probably beyond that by the end of the week. All right, so that's all I have for you for this week, guys. I hope you enjoy these videos that I make for you and sharing my pending orders with you. I hope it helps you to make profit with your trading. You can be profitable as a forex trader, but these are volatile times. These are not normal times. But it is what it is. You can protect your account if you'll just trade small, trust your strategy, and use a stop loss. And now if you're new to these videos and you want to follow along, I do these every week. Every Sunday before the market opens on the following Monday. Just be sure you subscribe to the YouTube channel. Click the little bell so you'll be notified every time I make one of these. And so that's it for this week. Until I see you again next week, don't forget, be kind to yourself, be kind to others.